you want to modify and click on Modify or Delete. This will bring up the order window. Here, you can adjust your stop loss or take profit based on your trading strategy. Once you've made the changes, just click the Modify button and that's it. The trade has been modified. Additionally, you can view the trade line on the chart window and set or modify the stop loss or take profit directly from there. For instance, to set a take profit for this trade, simply drag the line to your desired price on the chart and it's done. The take profit is set. Likewise, you can easily adjust an existing stop loss or take profit in the same way. Now, let's move on to setting a trailing stop. Just right-click on the trade, go to Trailing Stop from the drop-down menu, choose the number of points you want to use for the trailing stop, and that's it. Next, let's talk about how to partially close a trade. Again, right-click on the specific trade and click on Modify or Delete. The order window will pop up again. In the Type field, select Market Execution from the drop-down and then specify the lot size you want to close in the Volume field, let's say 0.02 lots. Simply click the Close.
All right, Quiet Markets crew, let's get you up to speed on everything that moved and shook the financial world yesterday and what we've got on the docket for today. It was a day where the market's mood seemed to swing between cautious optimism and waiting for the other shoe to drop, which, let's be honest, it's just a typical Wednesday. The main story, the big kahuna, was a surprisingly soft U.S. Producer Price Index report. Basically, the cost of goods at the wholesale level rose less than expected in August, with the core reading cooling down to 2.8% year over year. That was like finding an extra chicken nugget in your six-piece. A welcome little surprise that bolstered bets the Federal Reserve will feel comfortable cutting rates next week on Wednesday. And the market is now pricing in over a 90% chance of a quarter point cut. The U.S. dollar index, the Dixie, feeling the effects of this dovish vibe, faded its mild recovery from Tuesday and spent the day hovering around 97.6 level. The greenback was looking a bit pale, like it had just seen the ghosts of inflation past or future. We're not quite sure which. Over in Europe, the euro-US dollar pair managed to claw its way back above the 1.17 level after a bit of a wobble. There wasn't much data to work with, so it mostly just took its cues from a weaker dollar. The big event for the euro is today's ECB decision, where they are widely expected to just do nothing. Seriously, a 93% chance they leave rates unchanged. They're probably just going to sit there sipping an espresso and watching the Fed do all the work first. Geopolitics also added some tension after news broke that Russian drones violated Poland's airspace, which definitely didn't help the overall risk sentiment. It was a stark reminder that the world can be a messy place. The British pound, it caught a bit of a bid, revisiting the 1.356 zone as the dollar took a knee jerk. The UK docket was quieter than a library after hours, with the only notable release for today being the Rix House price balance. So not exactly a world shaker. The real star of the commodity currency show was the Australian dollar. The Aussie was on absolute fire, testing a 10-month peak and blasting past the 0.663 level. It's been on a tear this month, seemingly powered by pure risk appetite and the assumption that everyone else is about to get a rate cut. The Kiwi dollar also advanced, though it's struggling with the key technical hurdle like a gamer stuck on a final boss level. So let's talk about the wilder stuff. Oil prices, they rose for a third straight day, trespassing the $64 per barrel mark. This was a classic case of geopolitics trumping fundamentals. And because, get this, the EIA reported that U.S. crude inventories rose by a surprising 3.9 million barrels, indicating weaker demand. But traders were focused on headlines from the Middle East and the fact that Poland was shooting down drones. It seems the oil market operates on the same principle as action movies. Explosions are more exciting than spreadsheets. And of course, we can't forget gold. The shiny stuff resumed its uptrend, retesting that $3,650 per troy ounce level. and rapidly forgetting Tuesday's little tantrum it had. It is trading near record highs because softer inflation data is good for non-yielding assets. And also because, the world feels a little on edge, right? Silver followed right along, reclaiming the $41 per ounce mark. They're the reliable, shiny safe havens in a world that occasionally enjoys a good plot twist. So what's on tap for today? Well, strap in because it is a big one. All roads lead to the U.S. Consumer Price Index inflation report for August. This is going to be the main event, the final crucial data point before the Fed's meeting next week. The headline CPI is expected to show a slight uptick to 2.9%, while the core reading is forecast to hold steady at the 3.1%. This creates a bit of a weird dynamic. PPI was soft, but CPI might be firm, thanks largely to those pesky tariffs on imported goods. It's like getting a discount on the flour, but still paying a fortune for the baked cake. We'll also get the weekly initial jobless claims. So traders, get your coffee ready. Today, it's going to be the day we find out if the inflation fever is truly breaking or if we've just taken a bit more aspirin. So that's all I got for the show. Just one final note on the calendar. 8:15 a.m. Eastern Standard Time, which is, of course, New York City time. That is when Euro's financing rate decision will be released. Again, that's forecasted to stay the same at 2.15%. Policy statement will be at that same time, 8:30 a.m. Eastern Standard Time. We do, of course, have the CPI data coming out here in the U.S., and then the normal weekly unemployment claims at the same time. 15 minutes later, 8:45 a.m. Eastern Standard Time, ECB will flap their lips, give us a press conference to tell us how it went. So with that, back to you guys. We'll get into quiet markets. What's going on, Coach Tony?
Hi, how you doing, Coach Tiger?
Man, it's been a day, let me tell you.
Yeah, quite a day. Quite a day.
Been a day.
A lot of stuff going on all across the country, all across the world.
Yeah. Yeah. Yep. Needless to say. Yeah.
Yeah.
So how was your session, man? I was watching part of it this morning before
Actually,
I.
yeah, no, I wasn't actually on today. I'm on Thursdays and Fridays dedicated.
Oh,
But
that's right.
yeah. But No, I mean, I'm looking forward. I mean, I trade every single day, obviously. So
Hmm.
it was
Yeah.
kind of a rough trading day today for sure. Like, the Nasdaq was just kind of in this range for like an hour, hour and a half before it actually decided to break one way or another. And it was for sure tough. It was like a lot of chop. Obviously, I'm trading like the lower time frames. 10-minute chart, 2-minute chart. So I can't sit back and just kind of take it as it comes, place an order, and let it ride. So
Yeah.
no, it was a tough one. It was a tough one today, but we eked out some profit for sure. Ended the day in the green in the two Hola Prime direct accounts, so that's good. Hopefully, eyeballing another payout tomorrow. How about yourself? How's the
Nice.
trading been going this week?
And it's been going pretty darn good, I have to admit.
Yeah,
I locked myself in my bedroom late Friday night, early into Saturday morning, and was just kind of going through my periodic revisit and retest everything I do as far as supply and demand and all the other things I do.
yeah,
And
yeah.
I like to do that from time to time. I think all traders ought to do it from time to time,
Hmm.
just to go
Hmm.
through every single little detail of how you trade and your trading,
Yeah,
methods, and just look and make sure, okay, am I doing this right? Am I not doing this anymore? Did I forget to do that? It's so
sure. Yeah,
easy to forget little details here and there, even when you're doing it all day, every day. Like, so that just happened to be my day. I locked myself in my room to kind of go through. I had a little bit of a rough streak. So, it's
did you?
just good to do, especially after a rough streak. So,
Yeah,
but
yeah,
yeah,
yeah. 100%.
long story short, though, I kind of figured out some things I was skipping because, coming down to the smaller time frames, because I'm traditionally a
Yeah,
4 hour trader.
yeah,
Got my
yeah.
start on the smaller time frames, but coming back to it, I started to realize, like, wait a minute, this ain't working, that ain't working, and it's all because I was not filtering out some of the noise. So it all really had to do with fair value gaps and looking for the
Mm-hmm,
supply and demand zones closest to the origin of the move, the strong move.
hmm.
So
Hmm.
finding the efficiencies within those legs, and yeah, so far I've won all my trades this week. So
That's
it
great.
was,
That's
yeah,
awesome. See, so you
it's
bounce back after doing a little due diligence on your strategy. That's awesome.
yeah, yeah, yeah. I try to do it. I'm going to do it more often, though. To be honest with you,
Yeah, for
but
sure.
no, it's been a great week. On, the trade I finished this morning was a pound yen trade that I had opened up, and back end, if you don't mind, just flip on over to my chart and we can revisit that one real quick, because I closed this one like a few minutes before the PPI data come out this morning. Did not want to get tangled up in that mess, good or
Yeah,
bad. You can't
yeah,
take
yeah,
that
yeah. I was
chance.
gonna say.
Yeah. And I was already up quite a bit, so I didn't want to be greedy. It was a pound long. I was already buttoned up against a overhead supply zone, so I thought, well, we'll just go ahead and snap on out of this one and thank the market for its gift.
Sure.
But
Yeah,
yeah,
yeah.
I was initially looking at this trade with, I believe it was on Quiet Mark. Oh wait, no, this was live yesterday morning on Forex Fire. That's right. So, so just for context on the pound yen, it's been on. Well, it's changed to okay. It's still on there. So yeah, it's been one of my higher bullish scores on my top setups. Right now, it's sitting at a
Hmm. Hmm.
+7. So as always, 5 or higher is bullish, -5 or lower is bearish. When I look at the aggregate of all the economic data, so whether they beat expectations, missed expectations, or just hit it on the head, which isn't too
Yeah,
often these days, right? So,
yeah. That's true.
um, but, but yeah, I was identifying this demand zone here from the Sunday, or I should say the Friday close, Sunday gap up. I was looking at that as a pretty strong gap, so I saw that as a demand. Looking at that actually on a 1 hour time frame. And then I also was looking at this demand down here, which is the origin. So, um, so when price came down here, I got to be honest, I wasn't too excited about this outside of the fact that it was a strong gap up on Sunday,
Hmm. Hmm.
because there was no volume. Like it gapped up on no volume, right?
Yeah, yeah.
But I thought, well, let's keep an eye on it. So essentially, what I ended up doing was I put a half position on it, and initially I put a stop loss under that top zone, but after I put it in shortly thereafter, I thought, nah, I better drop it down to the bottom of the second one, which is where my line is. So initially I had it right about here, and then I dropped it down here. I kind of priced that in on purpose, just depending on how it reacted. And sure enough, it well, it just going back on like a 5-minute chart. Yeah, it just chewed through it like a hot knife through butter. So at that point, I thought, well, let's just drop it down to the bottom zone. And not only that, I ended up going to a 15-minute demand within this 1-hour demand. And I actually saw a stronger signal. So I saw that 15-minute candle there. So a little bit of confluence. So, yeah, I mean, as you can see, that's the one that ended up catching the bid, and it was off to the races. So, that report, the PPI report came out, and I ended up getting out right before it. Let me go to my 1 minute. Actually, I think I probably cut this closer than I wanted. Okay, so what I ended up doing was 7:30. Damn, I did that right at 7:30. Oh, that's why, because when price was up in this area, that's right. I remember what I did now. So when price was up in this area, I went ahead and moved my stop loss clear up here just to lock it in. So I just with that outside chance that it might spike, which I was about 98% sure that it was going to spike down, because obviously, bad dollar info can kind of jump into some of these other markets. Bad for the pound yen. So I wasn't taking any chances on it. Now it obviously recovered and would have gotten more, but that's okay. If I would have dropped my stop loss down here and still been in the trade, well, that would have just been breaking every rule imaginable. So anyway, the 7:30 Central Standard Time report hit, obviously, and just dropped it. So, but yeah, it was a real nice profit on that one. I don't know what it was on here, $47.50. But more importantly, I had this trade also on my other account that I've had well before, Hola Prime, and it was a $1,545 win over on that one. So
wow,
I caught a better bid on that one because let me see here. I ended up buying right around this area. So I basically waited for that 1 hour, 15-minute bounce. So I think I got into the trade kind of between those two zones at the end of it all. And
you can't pick a perfect spot. I mean, it's one of those things.
Yeah.
You get your entry point, and then you set your take profit and hope for the best.
And that's what I love so much about buying in supply and demand zones, unlike support and resistance, because you don't have to pick the exact spot. Just get the range. And then just trust that
you got to wait for orders. You got to wait for those orders to start filling in and support the level. And I mean that's literally what the name of the game for supply and demand zones are. That's one of the reasons why I really liked it too, because I could kind of take a back seat, or like at least take a step back and be like, hey, price is starting to come down into this into this demand zone. Things start to get bought up. Maybe it comes back a little bit more. Maybe you add into the position, but then again, clear stop loss was always the best thing. And it's, you get a trade like this. I mean, you don't always see a chart that looks as perfect as that, where it's like, hey, you got this support area and then it's just up and to the right along your trend line. But nonetheless, it's an awesome trade, dude.
Yeah, I mean, and along the way, obviously I connected that trend line there just to make sure it stayed above it. But once we had gotten to, I don't know, right around here, I think that's where I moved my stop loss to break even, or enough to cover a cup of coffee, right?
Yeah, for sure. Right.
And then when we broke this top, I ended up bringing it up a little higher. So I just kept, every new high, I would just bring it, just trail the stop up underneath the lows. And I did that because I knew I had this 15-minute supply zone here that very easily could have, touched and then dropped. So what I ended up doing, because it at one point it did bounce in here, it just wicked in. So I was basically just watching the trend line, saying, okay, if it breaks that trend line, I'm out. So I ended up moving my stop loss to kind of corner it, if you will. But it just kind of wicked in a couple, 3 times, and then finally I thought, well, I've pressed my luck enough. PPI is coming out So we're just going to cut it and tip our hat to the market and look on for the next opportunity. So
Sure.
but that was one. And then I also had another on Tuesday for Aussie dollars. So this was giving me a bullish reading as well. On a 4 hour, I think it was. Yeah, 4 hour. So I was keeping an eye on this 4 hour demand here. Really loved the volume exiting. And then it was not the greatest fair value gap, but if you kind of turn your head sideways, you can see a little bit right there, right here in this area. So I was looking at that and hoping that would be a strong enough signal. And sure enough, it was. We dropped down to a 15-minute spot there. The fair value gap looked way better on a 15, on a 1 hour. It was just the 4 hour. It wasn't looking good because that 4 hour candle included this down move. but yeah, it was a good, looking at it on the smaller time frames, it was great. So this was just a simple limit order right here. Just a simple limit order in because of the strong fair value. So I didn't even, and not only that, it was only about 5, 6, 7 pips wide anyway. So, you pretty much have to just trust your zones at that small of a range, that small of a time zone.
I was going to say, when you're getting these fair value gaps, are you looking to enter before or after?
After it pierces it and gets to the unfilled orders, the demand. Yeah.
Okay. All right. Yeah.
The suspected unfilled.
So after, right?
Yeah, exactly. I know a lot of people enter on the fair value gap, but I just prefer to wait.
You never know where the bottom is sometimes, though.
Yeah, and also those fair value gaps can get quite wide at times.
Sure.
Right? Yeah. So I do lose trades that way from time to time, meaning I just miss out on them. So no big deal. I mean, right here it bounced into the fair value gap and kind of got a little bit of a reaction, but I just ultimately like to wait for the potential unfilled orders, because sorry, my voice is a little cracky today.
Good.
But so yeah, I mean, when you get a basing action and then you get that strong of a move up, then history doesn't always repeat, but it rhymes. People see that initial move and think, well, when price comes back, I want to jump on that. Banks as well, right? They start playing with manipulation here and there. But yeah, that one ultimately worked out. And same thing, I just sold it right at this overhead supply zone so as not to get greedy. So yeah, it was a good week so far, man. And then I took another small winner on gold as well this morning. And I just did a simple London session breakout, but I did it a little different. It wasn't really a breakout when I entered. So let's go look at that. Yeah. So here we go. So, there's London open. And then this is the 30-minute high, 30-minute low. And I was initially going to do a breakout, but what I ended up looking at, this was more of a test, to be quite honest. I was actually looking at a 1-minute demand candle. So
wow.
Yeah, just testing the waters on this, small risk.
Yeah, for sure.
But I was ultimately looking at that red candle, which was it was 35 minutes, I guess, after the start of the market or the market open. But what I liked about the demand was, if I turn my drawings back on, what I liked about that thrust up was not only the fair value gap on a 1-minute time frame, but the fact it did actually get the first push and close above the opening range.
Yeah.
And I saw price when it was down around this area. So as soon as I saw that, I thought, okay, well, that makes me feel okay about taking a small percentage stab because of the fair value gap, the fact that it was strong enough to close to a new London high at that time. So let's just get a simple retracement and see what happens. So it got that initial push. It did end up coming down, but I had my stop loss down here where that red line is. So I was giving it a little bit of extra wiggle at the bottom of the range itself, the range low. And then, created a new zone in its wake. So at this point, I just kind of put my little trend line up to follow it up after I got in. And then, let me see, we had about 4 o'clock this morning, my time, 4:30. We finally got that first wick and rejection. And then that second candle after just spiked hard. So from there, I felt pretty good about it. Wrote it up quite nicely. And let's see, what was my thinking here? And then, yeah, I ended up giving away some of it because I was looking to see if perhaps we could test that opening range resistance again to see if it could be a potential support. And it did initially, but then I just kind of let it go. I was like, this is more of a test than anything.
Literally as the day continues on, and then the U.S. session starts in, it's like, the levels, they start to care less and less about the levels here.
Right.
Dude, that's an awesome trade. That was an awesome trade.
Yeah,
I mean, I'd follow that same thing tomorrow if you're online for sure.
Oh, I
just
will
keep
be.
on seeing if it plays out. That 30-minute looks like London opening range. That's awesome. Good for you.
Yeah, it's one of the little hidden gems I've discovered so far being in the London session. I never really did it in the New York session. I always had jobs, so I never had the ability to just sit, watch an opening range, opening ORB trade. So I thought, well, this is the perfect opportunity. Now that I'm on London markets and I can focus solely on it. So still a work in progress for me. Full disclosure.
That's literally exactly what I do. That's exactly what I do on the just on the NASDAQ, 15-minute opening range. And then obviously your standard deviation. I don't know if gold would behave the same way, like, the 50% standard deviation moves from the opening range high and low. It's just easier because, like, when, the U.S. equity market turns on, you generally have a direction for the day or a trend for the day. And it's just like, every time we get to that level, we hit another spot, maybe it's resistance, maybe it's support, and I just play it off of that, wait for the candles to close. I'm looking at obviously the smaller time frames. You're going down to the 1 minute, so that's awesome. Definitely getting away from, long way away from the 4 hour there, guy.
Yeah, that's been quite fun. Been quite fun getting back into it. I mean, again, when I first started trading, it was pretty well the 15-minute zones I was using. I mean, I dropped down to 5 minutes from time to time, but then I kind of got away from these smaller time zones for about the last five years or so because I just fell in love with the 4 hour time frame. And
of course,
in the effort to put on more trades for examples for the chat, obviously I jumped down for that reason, but. So it's just taken me a little bit of cobwebs, I guess you could say, to shake off and remember that there's a lot of noise down here because, on the 4 hour time frames, I didn't worry as much about going for the closest zone to the origin. I was just taking whatever zone was up and getting away with it. I mean, coming back to the 5 and 15 minute, I made the analogy this morning. Kind of felt like a baby scorpion that doesn't know how to control its stinger, right? So I was just taking any supply or demand zone I could find, so long as it's not in a contraction box, where the chop zones are.
Of course, I know, and exactly. That's one of those things. Is like, understanding the trend, understanding what's actually happening. The fair value gaps you got to watch out for. But I mean, it's like check the box. There are obviously things just like that you just need to watch out for, like that. That's the other thing is that, it's one of the things that we talk about on the future session is that, like, there's like a ton of reasons to get into a trade and you can almost coax yourself into getting into a trade. But there also needs to be just as many things that you need to look for as to, hey, this starts breaking down. I start seeing this come into the market, introduced into the price action. That needs to tell me, like, hey, watch out. Like, hey, maybe start to take some risk off the table if you have multiple contracts, or, maybe this trade isn't going to work out the way that I thought. So, again, that's just one of those things that it's good on you, good on you for, taking the time to actually figure out, okay, what are the things that I need to watch out for?
Yeah. So as a result, this has been my thinking this week.
Yep. I was going to say, so in that type of move, like, how much do you make in a trade like that with like one lot?
Be honest, I don't know. I don't think I've ever traded a full lot.
Oh, really?
I usually I don't know the calculations because I put in how much am I willing to lose, and then it calculates it for me. So Let me see here. Let's just test it out, actually.
I mean, what was the
Let's
move? It was
do.
like $10, $10 move.
Let's see here. So lots. Let's do that. One lot would be $350 on Aussie, or I'm sorry, on the XAU USD. It looks like.
Yeah, yeah, that's awesome.
You know, what would euro dollar be?
Got to
I'm just
size up
curious.
on that.
Yeah, well, now that I'm comfortable with this platform, I'm going to start moving it up. Come play with the big boys. So yeah, for sure. Yeah, so we got a lot over here on the euro dollar would be. Oh well, I guess it makes me do this first. Yeah. One lot's only $86. Oh wow. I figured it would have been more than that. Huh.
Yeah.
But you go to something like the euro pound, I bet it's going to be a heck of a lot different because it's one of the slower ATRs. What's a lot over here? Okay, $90. I guess it's not that big of a difference.
Yeah.
I figured because it was a slower ATR, the pip value would be higher than that. But either way, yeah.
Nice. That's
But
awesome.
yeah, I mean, maybe that's not the greatest thing to admit, but yeah, I've honestly never calculated that because I usually early on in Forex, I didn't have that. I literally, that's what I was doing, was just typing in because I had a really small account and I was just throwing numbers out there because it would only ask you for the lot size. So I was just putting in 100,000 micro units, 200,000 micro units, whatever the case was. And it wasn't until the last handful of years where I actually got software that calculates it for you. So I do need to start paying a little better attention to that, in all honesty. but so far, just getting used to this platform, I've just basically been doing like 0.1, 0.2, 0.3 lots, just to kind of get good with it. But yeah, now that I got my goodies,
I was going to say, you got to understand what the heck's actually going on before you start to size up. Actually, no, it's funny that you do say that because I was actually the same way when I first started. At least, not when I first started trading, but when I first started into futures, it was essentially like pip value, right? So like, or point value technically for, the futures contracts. But because I literally couldn't like bear to like look at the actual P&L translated into dollars, and depending on how many contracts I was trading, whether it was like in the beginning, it was like 1 to 3 contracts. And generally it was micros, but sometimes it was minis. And the tick value per tick, right? In notional dollar terms is totally different between the two contracts. So like I couldn't, it was so weird. Like I'd be down like, $1,800 in a trade. And I'm like, this is what, 7 years ago. So I was a lot younger and I was like, I'm losing $1,800. I can't do it. Like I literally couldn't do it. So that was good in the beginning, right? You could translate it into pips or ticks, whatever. But now it's obviously, further on into the career and, dealing with the dollar amount. It's like, it's nothing. Depending on how much leverage you're using and you're down $2,000 on, 4 contracts. Well, it's $500 a contract. It's not really a lot, stay in there. So, So,
no, good stuff. So yeah, that's a piece of homework on my list. Get back familiar with the calculations. Just want to say hello to the chat. Clinton, Joshua, how's it going? Sammy Machaka, nice to have you. Just going to kind of go over the PPI to data today and how that kind of shook out with these currencies, and maybe look at a few alerts I've got set as far as the strongest bearish and bullish items on my watch list. But if you guys and gals have anything else you want us to check out, futures or Forex, okay. Tony's your guy for futures. I'm your guy for Forex. So just let us know.
Absolutely.
Let's see. Okay, so Clinton's already asking quick breakdown on US 30. Okay, we can get to that. Any fundamental news coming up? Absolutely. Tomorrow we got some data coming in. We'll pull up the calendar in a second. And then Sammy says, "Hi, Coach Tiger. I took the same trade, but I only got as low as 3 minutes after open. I saw 3 minute swing low taken and took the first presented FEG, still holding gold. Trail my stops. 3 minutes. There you go, man. Yeah, I mean, I feel like I was gambling on the 1 minute, but yeah, you're a little safer than I am. I mean, I've had some moderate success a little bit so far with the 5 minute time frame, but I thought, well, let's just test my luck on this, press my luck, and
Yeah.
yeah,
Yeah. Yeah.
that
Yeah.
FEG,
Yeah. Every once in
like,
a
come on,
while.
Ty, you want to buy me, so I gave into it. But yeah,
Yeah.
let's
Yeah.
take a quick look at the calendar. I'll just copy and paste it over for all to see, just so we can
Yeah.
kind of revisit where we were and where we're going the rest of the week. And then I'll talk about this economic surprise score. And
Yeah.
apologies once again, everybody. My voice is not the greatest today. Been a little crazy of a day. So, yeah.
Yeah. A lot of yelling and screaming. I'm sorry as well. I got a little bit of the sniffles here.
Yeah. Okay. We're in the same boat. So yeah, we obviously had the PPI data. It was definitely a weaker number. Dollar dropped, but it's kind of retraced some of its losses. It looks like when I was just looking at the index, currency, the dollar futures market just looks like open and dropped pretty hard down. So we'll keep an eye on that. But yeah, just not looking good. This is dropping the outperformance underperformance score even more, which is over here. We'll take a look at that in a second. But yeah, you got Governor Hawksby. He had his little lip flapping session. So that was pretty much it for the day. But as far as tomorrow, to answer your question, yeah, we got the rates decision for the Eurozone, 8:15 a.m. New York time. Looks like a nothing burger unless we have a surprise up or surprise down, 2.15%. And then they'll be flapping their lips right after. So for the policy statement. But then, yeah, we got 15 minutes later, the consumer price index coming out. And as far as that goes, okay, looks like the same. Looks like we might have a little bit more of an increase on the CPI year over year, if all this projections holds true, of course. And then we have unemployment claims. So they are projected to be $2,000 less. So that's pretty well neutral for the dollar. The CPI, that might actually increase the dollar just a hair. Okay, that in itself, being 0.2% higher than the previous, is good for the currency. But that's at face value, and that's if all these projections, as always, are 100% accurate, which we can never trust because they're like meteorologists. They get things wrong a lot. So we'll just see what the surprise meter ends up giving us, right? That's really the best way to do it, is just be careful just before, during, and just after. Let the volatility cool, let the volume dry up a little bit, and then pick a trend and latch on. So, but then also 15 minutes after that, got the ECB press conference. I call it a lip flapping session. So we'll see what they have to say about their finance rate decision. That'll be 30 minutes after the decision comes out. So that's a little bit about what's going on. And it is also September 11th, which is a big Memorial Day, obviously, here in the States. So it's going to be kind of a somber day, guys and gals. We had a really important person in the community here in the States pass away. Don't really want to get into it, but yeah, it's
away.
Not a great,
taken.
Yeah, taken. So, but anyway, yeah. So it's just going to be another good day to be careful on everything you're doing. And as far as the PPI data that came out today, okay, I'll just move that out of the way now. So the U.S. dollar obviously is struggling, and I'll actually pull up the whole list here in a second. But yeah, as you can see there, so the dollar was, before this data came out this morning, it was actually showing, I think, a 35%. So that just simply means, so for this number, 20%, that means they've only had 20% of their recent economic data releases. Only 20% have exceeded expectations. So obviously that means the other 80% have missed expectations. So the data here in the U.S., it just ain't looking that good, right? This number, that's 20% number. Like I said, it was 35% yesterday, but just 2 weeks ago, it was it was in the 60s, right? So it was still middle of the road, still neutral, but at least it was above the 50 threshold, not below the 50. But now we're clearly down here in the dumps with the Swiss franc and then the Canada dollar. So just because of the releases of the data, yeah, those three are the weakest currencies. Leading the way, obviously, is the Swiss franc. That's just looking horrendous. 83% missed expectations. So that's an underperformance across all the reports. So that just means weak. But if you look at the flip side, the stronger currency is obviously the British pound. So they've had 86% of their reports exceed expectation. And then second would be the Aussie dollar and then the New Zealand dollar. So yeah, the land down under, they're looking pretty well on both sides, right? The twin countries. But yeah, it's all about the
100%.
British pound and Swiss franc weakness, but dollar's right there with it. So if we're looking at that 20% in the context of the actual reports themselves, the economic heat map, well, this is what it looks like. Okay, so all the reports, all the dates you see in yellow, those are all releases within the last 7 days. So there's been one bullish report, and that was the services sector of the PMI data. Okay, they're in a nice expansionary territory, but it's getting overshadowed because everything else has been bearish for the dollar, bearish, right? Including obviously today's PPI, bearish.
Mm-hmm.
Now, inflation data, keep in mind when it comes to the PPI and the CPI, okay, those reports have the opposite effect for the currency and the stock market itself, right? When we get US dollar inflation, okay, when it goes down, as you can see there, it's actually bearish. It's bullish for the market though, and it's bullish for our pocketbooks when we go out and buy goods and services, right? We don't want to see inflation. But the flip side is for the dollar itself, it's just basically a reciprocal relationship, right? It's actually negatively affects. But everything else pretty well affects the market and the currency, as you can tell, the same. It's just the CPI and the PPI, and then even the PCE. But the recent PCE report was more neutral at 2.9%. So that's why we're not getting a reading good or bad for the currency or the market, the stock market, right? And I believe they use the S&P 500 as the base market for this report. So,
yeah, most likely. Yep.
Yeah. And then when you separate it out into the sectors, okay, you got growth, inflation, and jobs. Well, growth is, it's okay. Okay. It's just neutral. Inflation and jobs, 0%. So all the inflation, all the jobs data has missed expectations. That's why the currency is being drugged down like it is. And that's why, it's just, that's why gold is skyrocketing. Gold and silver and probably the rest of the metals. Right?
Yep.
So
as it's been for like the last 2 weeks.
Yeah. Or 3-4 months or whatever it's been, but especially over the last, like you said, a couple weeks.
We're just up another leg. Yeah.
Yeah. So yeah, I mean, since we know that that's the case with the data, here's really the top setups I'm keeping an eye on right now. Now, gold, which is up there, so gold is still strong. It's still a very bullish signal, but it was up in the 11s and the 12s and the 13s for the last 3 weeks, but it's actually dropped a little bit, surprisingly. So it's still a very bullish score, but yeah, that's still my number one asset I'm watching. But now it's got room because we've had some currency pairs come in, and all the the basic theme of this, or the quick theme, is sell the Canada dollar, because you got 1, 2, 3 Canada pairs, 4 Canada pairs, 5, and then the other 2 where it's the base currency for the short. So every single Canada currency is given a sell rating for the Canada dollar. Mm-hmm. So by default, you buy the other one, whether it's a base, the base quote or base with a quote currency, what I'm trying to say. So that's definitely one of the main themes I'm keeping an eye on right there in itself. So I've got alerts set on all these pairs, but my preference would obviously be to be buying pound CAD or Aussie CAD, since they're the 2 highest scores. I mean, you got all the data over here. All the blue boxes are beating expectations. The red boxes are missing expectations. And then again, the neutral zeros just don't really have that much of effect either way. So you add all that up, I'm selling the dollar, and I'm still trying to buy gold and silver. Silver's down here at a 6. And then on the flip side, selling the euro. Looks like there's quite a few euro pairs up there as well. But yeah, just kind of flipping on over to some of my alerts. Yeah, gold again. Oh, that's where I'm at actually right now is gold. So yeah, I took that small position on gold. So I think at this point, and you can jump in here, Tony, if you have anything you was looking at, market or anything, just let me know, man.
Yeah. I whenever you're done, I can take over and we'll take a look at a couple of the markets.
Okay. I'll just look at like maybe my top 2 or 3 bullish, maybe the 1 or 2 bearish alerts, and then I can pass.
Yeah, no rush.
Okay. Yeah, I might have to get some more water anyway. Pound CAD. Let's just take a quick peek at pound CAD. So I've gotten an alert down here on this 30-minute demand, I believe it is. So it's a really nice, strong move, really good volume spread strength coming out of it. It was strong enough to eventually go through this overhead supply, which I believe that was a daily. Yeah, so it'd be this green candle up before the push down. It had already bounced into it one time. We got a reaction from the daily supply, but then it turned around and revisited it. So I wasn't really too worried about it just chewing through the rest of that to begin with. The only thing I'm a little leery about now as far as trying to get in a pound CAD long is that big orange box. Well, what is that? Well, got to go to a higher time frame and see that is a monthly supply zone. Okay, let me get rid of my drawings.
Yeah, little resistance.
So there you go. Right now, this is the second thing, Tony, that I was revisiting when I was up all night doing my review of my trading.
Mm-hmm.
Is making sure to keep in mind the weekly and the monthly support and resistance / supply and demand zones, right? So as you can see, it already touched the monthly once and got a reaction, and then it finally dropped. Now we're revisiting a second time. So it's been mitigated, but we are revisiting. We're going deeper. It's obviously a much larger range when you look at a higher time frame, supply demand zone. So, but the reality is I'm getting a buy signal. It is obviously quite high when you're looking at that high of a time frame. Go down to a weekly. You can also see though that it did bounce off of a weekly demand zone, wicked in nicely, and it's trying to go up. So it's kind of caught in between two things. We bounced off of a weekly demand, even though we're currently chewing through a monthly supply. So it's just a little bit, it's not going to necessarily keep me out of a trade. I'll just be leery about it and might even, be a little extra careful on my risk, maybe a smaller risk. Yeah. Same thing with the daily. So you can see you can see right here, we had a daily supply. Okay. This is way back, basically right after Liberation Day for the tariffs, right? We formed this daily demand, came back, touched the demand zone, shot up. So it's just really cool to see, no matter the time zone. I mean, these zones work pretty well. The higher the time frames, the more accurate I think they are. I mean, I don't have the data to back it up. I just have my own trading experience, and I have had way more success for me on the 4-hour than I have any other smaller time frames. But I'm also learning new things to get around the noise.
Sure.
So.
Yeah.
So yeah, I mean, so basically I'm just left with, now I do have a couple 4-hour demand zones down here. But with it being such a strong economic score, again, it's an 11. It may not come back. It may just, because we have broken this little triple top. Who knows? Maybe we just get a little bit of a reaction off of that. I actually need to, so one thing I want to do is actually put a resistance line there just so I know that was pretty much a triple top. I always do it in blue dash lines. Okay, so now that I know we're through the daily supply, we're obviously through that 4-hour supply, because there was a 4-hour supply at the top of that daily supply. which is confluence, it's strength, but in a strong economic bullish narrative, it should break through it. And sure enough, it has. So it's not quite closed over there on a 4-hour time frame, but it has on the 1 hour, just barely, right there.
Sure. Wow.
So I kind of personally would like to have a little bit more strength through the zone. So just looking at demand zones on a smaller time frame, I got one down here, but I want to see. Let me go back to the 4-hour. Okay, so I do have this one. That's right. So I've got this demand on a 1 hour, I believe it was, or 30 minute. Yeah. So that's I think still currently play number one, because if I try to buy anywhere in this choppy area, I'm probably not going to find too many strong fair value gaps on smaller time frames. And it's high on the curve. I would prefer to wait till it gets a little deeper of a retracement. So I think that this price point is still going to be my favorite ultimately. I mean, it is asking a lot of it to drop 100, 110, 120 pips. But I think that's just my favorite play. I mean, it moves 93 pips a day on average, it looks like. So this is probably going to be a Monday/Tuesday move. And that's only if I get a pushback down. But if I don't get that pushback down, then I would probably look to do something like this. Just come up a little higher, close, and then come down and find a new demand zone somewhere in this area. Maybe just a revisit back to basically a support of the former 4-hour demand supply zone. Sure. So it would just basically look something like that. It's not my favorite play, even though it is the strongest bullish, or it's not my favorite alert. But that's, I think, as close as I can get on it. Aussie CAD is the second one. And then US 30. Is that one that you would want to tackle in a minute? Clinton, I think, was asking.
Yeah, I never really look at the Dow.
Oh, that's right. Well, no worries, Clinton.
And QNES.
Yeah, no, that I just remember that. So no problem. Let's just go through that real quick, and I'll get back to these alerts. That's US Oil Tiger. US 30. Okay, I personally don't have a read on the indices because they are giving me neutral scores at the moment. I haven't really paid attention to the indices for the last probably 2.5, 3 weeks, because they were for a while on my bearish bias, but they are giving me scores. Okay, so S&P, wow, I'm a little surprised about that. S&P 500 and the NASI, they are giving me a neutral score of a 4. So they really need one good piece of news for them to bump up to a 5 or a 6 to give me a bullish bias, give me a bullish reason to get into this trade. Dow's a 2. It's too neutral for my taste. Let me see here. Yeah, so let's look at that anyway. US 30. Higher time frame. Okay, it did just bounce off a daily demand right here, as you can tell. Two sideways. Two sideways on a daily. I mean, ultimately, we do have a move if we get a deeper retracement. But again, this ain't necessarily something that's going to happen right away, I don't think. Let's do this anyway, just for kicks. I just want to make sure I see where that is on a 4-hour time frame. So that's obviously a daily, but since it's already been hit, I'm actually going to color it light yellow, because that tells me it's a mitigated zone, or it's just something to be suspicious about or careful about.
Yeah.
Okay. So we got a little bit of a demand in this area. Problem is there's no volume, not till you get to this candle here, which was the Friday, August 22nd candle. What was that? Was that Powell's speech maybe? Friday the 27th?
Yeah, was that the Jackson Hole?
Yeah, Jackson Hole speech. Okay. So, I mean, if we could revisit that price point. Here we go. Let's go to a 2-hour. That's right. So we got this little demand right here. So we got this little 2-hour demand at the very tippity top of that daily demand. I wonder if that's been hit. Let's go back and let's go into the future. Looks like it has. Or did it? Was it touched? Yeah. So let's do this. I'm going to delete the daily just for a second. And you guys can see that 2-hour demand zone was already hit. Okay. Just wicked in nicely right there. See that wick coming down? So that's done. Okay, that was a good move at the time, but it's done now. Once the zone gets hit, you want to pretty much ignore it, because that would tell me that the unfilled order is in this zone. Remember, it's not the exact price point, it's in the zone. Okay, unfilled orders probably sucked up and taken. So at that point, we'd want to look further down and to the left. Well, here's the origin of that strong move. Okay, this is looks like a little bit of time before, well, 6 or so hours before Powell started flapping his lips, right? But you do see another demand down here. Another little demand. So that's still there left for the potential taking, right? We know that zone is no longer any good, so we can delete that. It's old news. Yeah, so we're left with this 2-hour demand down here as a potential buy point. It just looks better than the 4-hour picture, because on the 4-hour picture, I dislike how the candle did not drop all the way down to the same level. Normally, the demand zone candles are going to at least be, the same length-ish. You might have a little wick on one or the other, but what I'm saying is it's too tiny. So I don't really like that picture on a 4-hour, but a 2-hour looks a lot better. So that's why I'm kind of drawing it. Okay, so that's the closest thing that I would potentially be interested in. Let me get rid of this. Yeah, just something like that. Just basically something like that. It's a long ways away. It may not get there anytime soon, but that is an option. Now, if we drill down into the smaller time frames, we do have this little bit of an uptrend, kind of breaking some new highs. Let's look and see what this wick looks like, or this wick looks like under a microscope. Yeah, too clustered in that area. Too clustery there, 15 minutes. Okay, so you can see we did have this little basing action with a little bit of a distance, okay, a little bit of a fair value gap. Price did come down, tap in, bounced up. So that negates this. It's already used. We just keep going down. Okay, let's look at this one. There's another little demand area. Okay, if and when price returns. Oh, wait, it already has. Okay. So that's a red candle down before the big spike up. Spiked pretty decently. You had a nice fair value gap, but it's already been mitigated. It's already been touched. So to me, that negates that. Okay, so the process just keeps repeating. You just keep looking down and to the left until you find a fresh demand zone that has not been hit.
Yep.
Looks like it would probably be down in this area, but again, that's quite a ways away. This is too clustery for me to try to get into anything like a 5-minute probably demand. Wouldn't be interested. By definition, we have a little bit of a demand right here. Problem is, you had a 5-minute supply right here that's already been forcing price back down every time it touches it. So, and this leg out candle wasn't even strong enough to make a new high. If this would have closed up here somewhere, breaking these highs, well, that would have shown me at least a little bit more strength to potentially come down to collect the unfilled orders for a long position there. So I'm not too thrilled about this zone is basically what I'm saying. Mm-hmm. Right? Because it wasn't even strong enough. That supply pretty strong. It's been doing its thing, but I'm going to delete that so I don't get confused later. Yeah, I've got no play for you, boss, on US 30. Again, it's given me a neutral score of a 2. The big banks on the COT report did decrease their positioning on the Dow. Now, on Friday, we get a new COT report to see what they did, right? And it'll be accurate as of Tuesday, yesterday to the Tuesday prior. So it's always about 3 days delayed, right? Which is kind of a pain in the butt, but it still gives us a pretty decent picture. But seasonality score is bearish for the Dow, along with all the other indices. Manufacturing PMI is negative, is bearish. Okay, the most recent one was bearish, meaning they missed expectations. Retail sales the same, employment change the same. But then you do have some good reports. Retail positioning is net short, believe it or not. So by Contrarian thought, that means that's a bullish signal. Okay, trend is up as we just looked. GDP report was bullish. Services PMI was bullish. CPI, PPI, that was all, well, yeah, that was all bullish, except this, I think we have to get this PPI updated on here, but, and then interest rates. So, yeah, I mean, you do what you want, but to me, it's neutral. And even looking on a technical only basis, I just don't see anything. I really don't,
Sure.
unless we drop clear down to a, well, we can't, I got to delete that one because, again, that one's already been mitigated. So, yeah, it's really all about, just from a technical perspective, possibly waiting for this 2-hour demand zone. Potentially. Right there. Would have been nice if that one hadn't been touched, but it did. It got touched. And that was a super narrow range demand zone, too. You know, that volume that came right there, too. Whew.
Yep.
Man.
Yep.
That was a hell of a play right there.
Unbelievable.
So hope that helps. Hope that helps, Clinton. Yeah, we went over the fundamental news. Okay, perfect. Yeah, just let us know if anything new comes across your minds. We'll jump on it. But other than that, I'll just go through a couple of these alerts, man. I'll pass it on over. I think it was Aussie CAD and New Zealand CAD. Let me just go get those pulled back up. Yeah. So pound CAD, New Zealand CAD. Okay. Yeah, same thing. Oh, we already went through the pound CAD. We need to go through New Zealand CAD. There it is. Okay, so New Zealand CAD, we did have some recent price action that broke through a 4-hour supply zone, broke through a daily supply zone, and broke through a weekly supply zone. So that tells me that this leg up, there's some strength in there somewhere. Right? It was strong enough to break through the 4-hour, the daily, and the weekly. So that's awesome. That's awesome to see. The best one I've come up with so far is this fair value gap here off of this demand zone on a 30-minute. Yeah, so I do actually have a handful of 30-minute zones I'm keeping an eye on. I usually try to just watch the 1 hour, the 4-hour, and that's about it. But I've had a few 30-minute and 15-minute zones look pretty good, you know, just in the attempt, obviously, to get some more smaller time frame stuff. But yeah, I really like this demand. Really love the volume coming out of it. Believe that was the NFP candle, if I remember right. September 5th. Yeah, Friday. Okay. So NFP candle. Okay, this is a non-US dollar pair, but keep in mind the US dollar has effects all around the world, right? New Zealand, you got Canada. Well, obviously Canada is tied closely to the dollar, but yeah, a cross pair, and you still had a pretty good move on another pair that moves quite slowly, kind of like molasses. But we still had a big spike up of about 50 pips. So just give me a retracement back to the origin of that NFP candle, and it's off to the races. I mean, that's going to be my favorite. A long ways away, okay? But again, that's that's the highest probability, because all this market from the origin, it's pretty well an efficient market, meaning the candles have kind of overlapped the candles to the left of it, to the right of it. Look a little deeper here. Actually, let's look at that on a 1 hour. Oh, no, that was a 4 hour. I'm sorry. I have so many time zones now, I forget which one's which. Okay, so I take that back. We actually did have a little bit of a fair value gap coming out of this area. So that's actually the origin. Well, a little bit stronger. So that little yellow box, that's the distance from the proximal line of the demand zone to the underside of that second candle. So you got the leg out candle, which pretty much starts the mass exodus of the zone where the buyers won out. Demand exceeds supply. So by definition, the price has to rise. So it rose strong enough to make that little gap. So that's ultimately the better looking one. The whole reason I put my alert on this second one, on that 30-minute, is because it was right under that former support, turn into resistance, bust through. Could it turn into a support again? Okay. Well, if so, I'll just take a little stab just underneath it. So that's kind of my thinking on that one. If it fails, we got ultimately the origin of the overall move down here to take. So that's really, you know, trade opportunity number 2. If the first zone does not zone. or does not hold. But I like either one of those because, again, it was strong enough to push through this 4-hour, daily, and weekly supply zone.
Mm-hmm.
I mean, it's wick. I'd like to see it close up here. I really would like to see it close before it retraces. That's why when I drew this the other day, I drew it slightly above. So we've come slightly above. We just haven't, on a 4-hour anyway, haven't really closed. Daily, 1 hour, 1 hour closed, I guess. That might be enough. That might be enough to make me happy. We'll see. But yeah, these are going to be simple limit orders for me, Tony. I'm not even going to require, bullish engulfing or anything. I mean, I definitely would like to see the volume pick up, but you just give me a simple retracement, I'm limit ordering at the top one. Small loss underneath. Limit order number 2 with a stop loss under that. Because if that first
leg into it.
You're right. Yeah. Yeah. Or what I may end up doing is just do maybe 75% or 50% of my order on the top. And if we get a retracement, then take the other 50.
A little lower. Yeah.
Just kind of average in or dollar cost average with the intention of taking my stop loss, obviously underneath the bottom.
Oh, for sure. Yeah. Yeah.
So
depending on how things are moving there, for sure.
Yeah. Okay. That's all on the bullish side. Let me see. Just take one quick look at a couple of these bearish. I'm done. CAD Swiss, CAD.
Yeah, there must be a couple. I was going to say there must be a couple. Well, you said even like the Canadian dollar, right? Anything that's really pegged to the Canadian dollar, and you're looking for a quote on it, then maybe we'll look for a short.
Yeah. Well, let's look at the Canada dollar. Well, since you mentioned that, we'll pull up the economic heat map for it. Here we go. Here we go. Canada dollar. A lot of red, a lot of ugliness.
Mm-hmm.
Saved by the CPI and the manufacturing PMI. Otherwise, it'd be a 0.
For sure.
Yeah. So the only thing we've had for Canada in the last 7 days was the unemployment and employment numbers, obviously, the weekly numbers. But yeah, they had another 0.1% higher unemployment rate. That's ugly. 7.1%. And we're over here complaining about, 4% or something like that?
Mm-hmm.
And then, they had ugly employment change numbers as well. Look, they already, previous minus 40,000. This time they had minus 65,000. That's disgusting.
Yeah. That's rough.
Well, that's why Canada is at the very bottom of all the top setups, selling it. So there's 2 options I have on this CAD Swiss setup. One for a higher time frame, one for a lower time frame. So higher time frame, we obviously have this daily supply zone up here. That's, of course, a green candle before this big push down. Again, that's the NFP candle. Okay. So supply, we go down to, I think this was a 1 hour. Yeah. So on this one, we have a 1 hour supply zone with a big spike down. But inside that 1 hour supply is inside of the daily supply. So that's confluence. That's what I love to see with a gigantic fair value gap. Obviously, that's the NFP aided in that. But just give me a simple retracement to the origin of that strong move. And that's going to be this red projection tool up top. But then also, if we get to this spot here, which is in the middle, I actually was looking at that on a 30-minute. It's not a green candle, but the point is we're getting some wicks down, some wicks up. But if I just wanted to move that to a 15-minute, you'll see it a little easier. Yeah, we're just keeping an eye on that spot right there. That's obviously kind of a continuation of the NFP move, but it's what we got is a base drop. So those basing actions in base drops are pretty strong too. I like those zones. I mean, I prefer the rally base drop, right? Rally base drop. That's what I prefer. But I mean, these things have a tendency of catching an ask as well, or catching a bid on the opposite side. So,
sure.
And then we did have a little bit of fair value gap coming out of that, even on a 15. So this one I will be picky with. This one will require me to see a bearish engulfing candle with some volume spike. This one has to prove itself. And if the VSA candles don't come out 3x, 4x higher than the previous handful, then I'm just going to skip it all together and then wait for that 1 hour where I will have a limit order sell waiting on it. So, and then the algorithm spits out this as a supply zone, but I don't like it. No fair value gap, no real strength. When a supply zone forms, I need my leg out candle to look like that. Big, fat, long, expanded range candle. Not
100%.
like that. Yeah, that's weak. And it's low on the curve. Not quite. I mean, this one's technically diddling in the middle if I look at this one here, but yeah, ultimately I think I want that top one. But we'll keep an eye. We'll keep an eye on it. So that's my two options on CAD Swiss shorts. And then lastly, my friends, and then I'll pass it over to Tony. I'll look at CAD Jap, Canada Yen. Canada Yen, where are you at? I got so many alerts. Oh, it's at the very top. Okay. All right, so we got, let me look at my daily real quick. Okay, so daily, we hit a little bit of a daily supply once. Now we've went in a little deeper, collect some more unfilled orders. Would be nice to see. Okay, so here's also a daily demand, but it's already been touched, mitigated, so I'm no longer worried about that because it's already, in my opinion, probably taken any unfilled orders from that candle there. So we're going to ignore that. It's not really a thing anymore. My algorithm usually gets rid of those. Sometimes it doesn't, but either way. All right, so we had the daily supply bounce. There's a weekly supply overhead, but it's already been touched, so I'm not worried about that at the moment. Or monthly is way too high to worry about. So we just need to find. Okay, we had a 4-hour supply here that got touched perfectly, even dropped. I don't know why the hell I missed out on that. Oh, probably because it wasn't an alert yet. Well, look at that. That was beautiful. 4-hour supply sell opportunity right there after the gap. Well, that helped it close, actually. So, okay. 4-hour. Got a 1 hour here. Looks like it's in the middle of chewing through it now. Maybe. I don't know. I feel like I got a lot of wicks on this market that I'm not too excited about.
I know it always starts of course, right when you're starting to identify a setup, you start getting wicks, the market starts behaving a little weird, start to lose a little confidence in it.
Yeah, I mean, it looks like I did draw in. Okay, so I drew in a 15-minute supply. Okay, that's right. Okay, so I'm kind of okay with this move, looking at it on smaller time frames because obviously fair value gap speaks for itself. The VSA volume speaks for itself, nice and strong. So we've had price come up, base sideways for a while. So what I like about this, I actually really like this, is all the liquidity. Okay. All these people that are trying to sell to force the market down, they're putting their stop losses, in this area. Right. And probably even inside of the supply zone itself. So I would even expand that up like that. So you got stop losses. Okay. They're buy orders, right? People have all their buy orders chilling right here, which is the opposite of their sell that they're trying to sell. Now there's liquidity down here as well. But up here, I like the fact that they put their stop losses in this area. Again, the opposite of a sell is a buy order. What do the banks and institutions need to fuel their sell orders? They need these buy orders. So just give me a simple push through above these highs into my supply zone. They're going to collect their buy orders to fuel their sell orders and the unfilled orders for a sell. And then you can basically, conservatively, I would just look at this demand right here. As far as my take profit, what am I doing here? Magnet. Yeah, just wrap a rectangle around this little demand down here in the bottom. And that way, that's my take profit. Just a real simple buy to cover just ahead. I'd probably buy to cover right around the tip of that arrow. so as not to get a bounce off the demand and it turn around and try to push it up and take away my unrealized profits. So it's actually that's pretty good zone. I like that a lot. And I've got my alert set. So yeah, my friend, I think that's like my top 5 bearish and bullish setups right there. So
that seems pretty
what's
good.
the biggest loss each of you have taken on in your trading careers?
What the hell is that?
Tony, I'm sure yours is going to be much higher than mine since you were in the institutional business.
Yeah.
And I think I heard you say,
it's a rough one.
I think somebody asked you guys on Futures show one day, but what's your answer to that?
Yeah, actually, no, it was literally on Quiet Markets. I was with Coach Michael, and this is when I first started with Hola Prime, of course, right? Baptism by
okay.
fire. It's one of those things. Yeah. Yeah, I mean, I came from the institutional trading side for anyone watching. So, big institutional money, like trying to move stuff around, doing a little hedging, doing some proprietary trading, stuff like that. And then executing client orders, stuff like that. So, yeah, my biggest loss is for sure going to be outweighed or outshined by, well, maybe, I don't know how much notional value Coach Tiger's thrown around here, but my biggest loss, I mean, I remember it perfectly. You're gonna give me PTSD. I'm gonna have a Vietnam flashback here. This was, I think it was, I was about two years into my institutional trading career. I took on a 330 or 370. I think it was $370,000 loss. We were eyeballing it. Yeah. And it was really bad. It was really bad. And really the question was, do we cut the loss now because there was still a position on? And it was one of those things where, they call in the head of trading, they call in one of the risk managers, and we all get on a meeting, and it's like, okay, so do we wait for essentially a reversal from the New York Open? This was at like 8:00 in the morning. We still had like an hour and a half to go until the New York Open. And they're like, do we wait for like a potential reversal? Because shit was just getting blown out. And I had a position that went totally south overnight. Okay. But it was technically by instruction of another client. So like, I'm not trying to pass the buck in terms of blame, but I was technically supposed to have like a position on, but the position was much larger than what was technically supposed to be on. So, so nonetheless, we all got together and they essentially made the decision like, actually, no, at 9:00 a.m., we're just going to cover the position on the open market and just like hope for the best. And because it's like the old adage of not cutting your losses, right? When you're eyeballing like a huge loss, and like I said, on the institutional level, it's totally different, because like the values are just way higher. But it's just one of those things where we cut the loss at 9 a.m. And, had we waited like until I think it was like 11:30 in the morning Eastern time, so had we waited a couple more hours, we actually would have made money on the position. But it's just one of those things where it's like you can't account for that. Like you can't account for it. You can do all the technical analysis, all the different stuff to try to figure out where the market's going. But when things are like busting, like support levels are just getting blown out overnight, and like no levels being respected, you're long, you're losing money. Like you can't count on just a weird reversal or some sort of arbitrary level to suddenly matter in the market lift. So we cut it, took the loss, and like I said, had we waited a couple hours, we would have been okay. But in the institutional trading game, like they're not waiting on that. It's not a hope and a prayer. This was a major F up. Let's try to not do it again, but let's get back to it and move on. So that was my biggest loss personally. I think the biggest loss personally for me in my cash account is like $7,000. And that was
70?
from no, 7,000.
Well, 7. Okay. I thought I heard that
Yeah,
wrong,
yeah,
but I
yes.
wasn't sure.
No. 70 grand would wipe me out. For sure.
Okay.
No. Yeah, 70 grand. No, it's 7,000. And that was,
Yeah.
when was that? Yeah, that was a couple of years ago too. It was like sometime during COVID, like something was happening, like tech earnings or something. So the market was going
Mhm.
crazy, just totally chopping around. And it was one of those things where I was like long, short, reverse position. And it's literally like, yeah, dude, you bought at the high and then you sold at the low every freaking time. And you just got totally chopped up, like textbook definition of getting chopped up. Um,
Yeah.
and obviously just having no bias or like no direction on what the actual market was doing. And it was a really
Mhm.
tough trading environment during COVID. Like there was a lot of um, market inefficiencies that were kind of rearing their ugly heads. There was a lot of weird stuff going on in the different futures markets and the underlying commodity markets too. There was weird stuff going on. So yeah, COVID was pretty crazy. I mean, ended up doing well over like the 3 year period, but nonetheless, there's always like a market sentiment shift that happens like every 3 to 5 years. So
Mhm.
you got to endure. You just got to endure, right?
Yeah. Yeah, I think
What
1250 is
about
about
yourself,
my
Coach Shaq?
max. I don't have any fun stories like that, but probably about 1250. Yeah.
Yeah, that's good. I mean, honestly, they're not fun. Like it was horrible. It was
Well,
so
yeah, they're not
horrible when
fun,
I
but you learned a lot. Yeah,
No,
you
yeah,
definitely learned a
yeah,
lot.
of course, yeah. You always learn a lot, and like, right, that's the educational expense that they always talk about. And it's like, yeah, I guess you had to do that, but like, even $7,500, like that's freaking money.
That's a
It's
lot
like
of
two
money.
months of rent.
Yeah.
Yeah. I
Yeah.
mean, it's like 2 months of rent out here in Boston, but it's just like out near where you are, it's
Dang
probably
it.
like 4 months. I don't know how good you live,
Uh,
Tiger.
yeah, pretty well. I think that'd be about 3.5 months, I think.
Yeah, that's
3
awesome.
months. 2, 4,
Yeah.
6. Yeah, three
Oh
and a
my
half.
God. Don't even get me
Three and a half
started about
months.
real estate prices in the Northeast.
Yeah.
$500,000 for a crap box. Like, oh my God. So,
Dang,
yeah,
that's crazy.
1250. What happened? Do you remember what happened? Like you had a
No,
trade, you didn't cut it, or
uh, no, it was just probably one of the early attempts of trying to, yeah, just risk up, risk
yeah,
up. Yeah,
yeah, size up.
yeah. No
Yep.
real fun stories around it, but yeah, I don't think I've had anything any crazier than that. Yeah, I've always been real. I mean, I'm not great at everything in trading, but I feel like I've always been really good at that. Like, because when I went through the academy, like they literally beat that into our head all day, every day. The risk management. We started our day
Mhm.
during the middle of the day. We ended our day. It was all about the risk management. So if I got good at one thing, thank goodness it was capital conservation. So
Conservation. Yeah.
yeah, that's
Yep.
as of right now. But I've never had like big amounts. I've honestly never had big money accounts, just some smaller ones,
Mhm.
right? But
Yeah.
so I'm sure I'll probably eventually beat that as I grow my accounts, right?
Well, yeah. I
Yeah,
mean that's always the thing. Like I said,
definitely
like
will
you lose
beat
two
that.
thousand dollars, but you're trading like four contracts. It's like $500 per contract.
Yeah.
On the
Oh yeah,
future
for sure.
side.
Yeah.
Um, yeah,
Yeah,
on the
yeah, yeah.
future side for. And I was gonna say,
Yeah, it's a
it leads
little
me to my
easier
next
to.
question.
Yeah.
Go ahead.
I was just gonna say it's a little simpler, I think, on Forex because you can bet as minimum as amount as you want. I guess it's not like futures, right? Where you have to trade or wager X amount just for a contract or two, right?
Yeah.
So, but yeah, with
Yeah.
everything being fractal and currency land, it's easier to just lose tiny amounts to start with, anyway. So, yeah,
Yeah.
kudos to
Yeah.
you guys not having those minimums on a loss.
Yeah. 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 Actually, I was gonna say it leads me to my next question.
Yeah.
Like daily loss limit, do you have that? Do you use that personally?
Um, it's really a lost number. It's 2. If I lose twice, I need to reevaluate. So just get the heck out of the market because I'm on such higher time frames. Now, obviously, getting back into the smaller time frames, I'm going to start trading more. So it may increase to 3 or 4 or something like that. But
Sure.
like if I get into 2, like it's not very often that I get into 2 trades on the higher time frames. Except a month ago, I was actually in 3 4-hour supply and demand zone trades, which was like a gigantic number for me. But yeah, that
awesome.
number 2 was kind of an initial thought. Like, okay, if I lose one trade, not a big deal. If I lose a second one, I'm picky about myself. I better just cut it for the day and just spend the rest of the day sitting on my hands, watching the market, and take my mouse and put it on the back side of the computer so that I can't reach it to hit the buy or sell button.
Yeah. I know. It is always a tough thing. I think one of the worst things, at least not one of the worst things, but I say one of the hardest things for me, for sure, has been over trading. Over trading has been so tough for me. Not just like, I mean, I was never really like gambling, really, like, just look at the chart and hit, buy. Yeah, this is like first year of trading, right? Like I never really did that. I always tried to look at the market to try to identify some sort of underlying trend or some sort of level. But yeah, I mean, I think there's over trading. Like, oh, this is it. This is when the market is going to start to move in one direction, and I'm going to be on the right side of it. That was always my biggest kind of rough spot when it came to trading, and it obviously leads to like some of the biggest losses, right? Like I said, like it was just like the reverse position button is like a really, really, I would say, highly contested button, at least for me. Like, obviously brokers put it out there, right? Because they want you to trade, right? They make money on the on the spreads and on the fees associated with executing your trade. So it's like, freaking chop it up, churn your account, churn it. So they want you to be, buying and selling constantly.
I did hear somebody say, I don't know if it was Coach Darrell, because he does the reversals, doesn't he? Or who am I thinking of?
I was
somebody, maybe it was somebody.
Yeah.
It could be somebody else, but either way, somebody I heard once say, I'm not trying to be right. I'm just trying to make money. So whether that's reversing a trade or whatever, then that's what I'll do.
Of course. Yeah, I know. Actually, that's funny that it is. Yeah, it's funny that you say that. I did execute on the reverse position button. I did it today, actually, and I also did it earlier in the week. I think I might have done it yesterday. I'm just kind of looking at the chart. Yeah, I think I did do it yesterday, kind of like midday. Like we were just kept on hitting like this ceiling, like up on the opening range high, and I think I was like, you know what? This is not working. Like we're not punching through. We're not. I was long. I was like constantly like getting long. Maybe I got stopped out once, got long again, got close to my stop. Wasn't really playing out. And I was like, you know what? Screw this. Like reverse position, and it was right decision. I mean, it works like that. But like in the chop, it's like do not hit reverse position, because again, like today I had to do it, and when I share my screen. I'll kind of go through what the heck happened, but it was one of those things where it's like, hey, the market looks like it's coming down. Oh, the market's going back up. Oh, it looks like it's coming down. And I'm sure people were just hitting reverse position left and right. So going back to the chat, I think this Sammy. Let's see. It says, Tony, coming from the institutional trading side, what is your opinion on big institutions causing price fluctuations by selling a position to create a discount area and buying it back at that low? For sure, Sammy, that's a great question. It's definitely something that I would literally do. 100%. It's very true. I know a lot of people actually, hopefully Coach Darrell isn't watching right now, because Coach Darrell seems to believe, and I'm not sure of his background. I think that he was an institutional trader at some point, or at least he knows a lot about the institutional trading side. But I think he's under the impression that like the big institutions are not hunting for your stops. Like they don't care about your little retail order, sitting there right below a figure low. So like, a figure is like a round number, obviously, for anyone watching. But for sure, dude, it's what we did, because it's all market psychology. Like it's market psychology. Hey, like gold, breaking out to new highs, say, $3,600 the figure. Like, I say I'm long, I'm going to lift it all the way up. I'm going to blow it through $3,600 a figure if I can. COMEX gold is
Yeah.
definitely a hard contract to push around because it's traded on the global stage. But, there are smaller commodity futures contracts and even stocks. I did equities, individual equities. So like trading like mid cap equity stocks, like small to mid cap equity stocks, like so easy. Like you could take a couple $1,000,000 and push it around, no problem. Like not even a couple million. Like it could be like $100,000 sometimes. It's ridiculous.
Yeah.
So like, yeah, you blow it through a figure, right? People think it's a breakout. It's a breakout. And then you just stand there, sell it back down through the figure, make people think it's a fake out, create a gap, and then you buy them all back on the cheap. It's something that was definitely done. It was taught to me very early on, smart money concepts, following the big banks, the institutional order flow, the footprint, whatever you want to call it. These are all like derivatives of essentially institutional order flow. But yeah, it's something that happens. Don't take it personally.
Right. That's
literally at the end of the, I mean, it's easy to say, right? Easy to say, but then when you lose $1,000 and you're like, fuck. It's hard. It's hard to come to terms with, especially when there's just that reversal. Like I said, it goes your stop and then it just reverses. Had you stayed in or widened your stop, you would have been right, or at least you still would have been in the money on the trade. You can't take it personally. Like, my job as an institutional trader was, there was a proprietary trading side, but then there was also the side of, hey, or a client sends an order to us, you need to execute it. And this was, I think, Coach Paul, who had a commodity trading background. I think he worked at Louis Dreyfus, LDC, on the agricultural desk. He kind of was in the same position, working on the hedging of, I think, like grain marketers, if I'm not mistaken. So they would come in and be like, "Hey, I need to hedge price." Like, do you know more about his background, Tiger?
I think it was in the grains or soybeans or something.
Yeah,
that's the extent of what I remember.
Yeah. But I mean, Louis Dreyfus Company, they're a huge agricultural commodity trading house, both in the physical and in the cash. So they're trading futures, hedging out for clients. But so it's kind of the same thing, right? Is that you're essentially like a broker, and you take in client orders, and they need this executed either by the end of the day or by a certain time. Like there's usually at least some sort of set of instructions that comes over with the order. And sometimes it's like fill or kill, where it's like, hey, I got 100,000 contracts here to sell. Of course, they make up their own lingo on the institutional trading desk. It's fucking ridiculous. Sorry, it's ridiculous. It's ridiculous.
Right.
Of course, and it's just to keep you out. It's just to keep you out, so you don't really know what the heck they're saying. But like I got 100,000 contracts to go, get it done. It's fill or kill at this price. Say the market's trading at $37.50, and their fill or kill down to like $37, down 50 cents. Like you're literally pasting this order onto the live market, just blowing out stops, blowing out orders, because you have a set of instructions. You have a deadline. Right. Okay. And I tell another story from my time on the institutional desk where this was very early. I was like 6 months in. I had just become licensed to trade, so I could, handle client money and the firm's money. And there was a client order that came in. I was, again, selling it. And this was just on an equity. So just a regular stock equity. And it was really illiquid. And I was just like piecemealing it. So say I had to sell like 50,000 shares of this stock, only like 10,000 shares trade in a day. So like 50 was definitely pushing it. I was going to like kill this thing. Sorry about that. So I was going to kill this thing. And probably like 2 hours in, I only had the order until about 1 p.m. Eastern time because they wanted to be done by that time. So 2 hours in, I'm halfway there. I'm halfway into my allotted time. And I've only sold 15,000 shares, and I've already pushed the price down like a lot. And my head of trading just like yells over, really he yelled over at first, and then he came over to my desk. So he's like, is that order done? You got to be done with like
Yep.
60% of that order right now. And I'm like, he's like, well, how much have you sold? I was like, 15%. And he was pissed and he had a lot of words to
Yeah.
say. And he came
Yeah.
up to my desk, moved me on the little rolling chair that I had, and just punched into my keyboard, like selling 10,000 shares. I had only sold 15. I had 50 to sell. He's going to sell another 10 grand market. Boom.
Oh,
The stock takes a crap. Okay. And I'm like, yo, like, what the hell is going on?
yay.
And so now the stock is down like more than 2% in the first 2 hours of trading. So of course algos pick it up, like the Citadels of the world, JP Morgan, Goldman, all them. So you have a stock, there's no news out, so there's no negative news. There's a shitload of volume going down the pipe. The stock is going down 2%. So it's like a sell-off, right? So now it's down 3%, 3.5%, and now there's sustained volume behind it. And I'm like, I said to him, I'm trying to not induce a panic in the stock.
Right.
And he says, and he is, again, colorful language. He's like, I don't give an F. He's like, you have a mandate, get it done. And that's it. I mean, literally, that's the name of the game. But dude, I mean, I got it done by 1 p.m. and then the stock flatlined. It went back to unchanged. So it was like down 5.5% on the day, and then it was back to unchanged by the end of it. And I was like, for what? For what? Like and that's the other thing. Like you look at like the S&P 500, you look at the Russell 2000, depending on like what you're trading and how high the beta correlation is. And I was like, the market's going up. I was like, the market's going up. Like, why do we have to sell this thing down? Like, let's just like pick a couple of spots and like let the market eat through. He just wasn't having it. So like I said, when it comes down to like the psychology of the market, don't forget, like, yes, there's a lot of algorithms out there, of course, right? I don't even know what percentage of the market is actually algorithmic trading. Like, I know it's somewhere around 60% is all algos,
60,
right?
I think I saw. Or
Yeah.
about 60.
Is it as high as 70?
60 or 70. I don't
Yeah,
remember
I was gonna
exactly.
say. I think it might be like almost
60 or 70.
higher.
That's so
Yeah.
freaking
So
crazy,
I
though.
mean, yeah, I know, and that's the thing is that like now what the name of the game is that like now you just got to like figure out what the algo is trying to do, you know. So
Right.
it's really just like trend following, follow the money, and that's why myself and Coach Tiger really do try to just follow the trend. Tiger's looking at the higher time frame. Why is he looking at the higher time frame? Well, because the trends are stronger on higher time frames. Like, and that's the thing. You don't want to get caught up in the chop. Like I always say it on the futures takeoff sessions. Like I can't tell you, really no one can, what this futures contract, what the NASDAQ's going to do in the next 30 seconds. I can't tell you. It was going to up, down, sideways, whatever. Like that's not what we're here to do. And if you really think, say you're early on in the trading, if you think that that's the name of the game is like figuring out, like you enter into a position and I just bought, I'm long, I just bought, and it goes down and you think somehow that invalidated your thesis of why you got into the trade. That's not true. Like you got to wait, you got to let your trade play out. So yeah, these are just, again, many different lessons that you learn from years of being in trading.
No, that's really
You
good to
guys,
hear it, though, from an institutional trader, because I've heard the same
yeah,
things. I've heard people say the same thing. Oh, they don't care about our measly stop losses and this and that. I've even seen YouTube videos of, I guess, former institutional traders say that. I'm like, I just, all I can think of is they're just trying to protect each other.
yeah,
Like
sure.
that's,
Oh, for sure, sure.
because like you just said, the guy said, "F it, we got to fill this." So he comes and puts in the rest at market order. Like you can't do that. Like and expect price to just sit there and let you do it all. I mean, that's why they have to accumulate before actually pushing the trade or pushing price. But
yeah,
it's kind of hard to put a multi-million-dollar order in and get it all put in. So Um,
Yeah. It's literally just one of those
yeah,
things where it's like you either got to do it or you don't. But it's like I said, it's very for as algorithmic and computer driven the market seemingly is. It's also very human for sure. And sometimes
right.
you can't forget like again like these levels where say it's a round number, say it's like multi-month resistance or support. Those are they have intrinsic value for sure, but they also have real um, tangible value. Um,
Hmm.
so
Yeah,
sometimes I always like to think that like I am trading up against an idiot, former colleagues, peers,
yeah.
stuff like that. So
That's
you
what I.
can't forget that.
Yeah, that's what I love about it, especially with forex trading. I just love, like, at first you learn, okay, this is the banks manipulating this, manipulating that. But when you realize
Sure.
that you can actually look at that as a good thing
Yeah,
for everybody watching that trades forex, if you can look at that as a good thing, all you got to do is just learn their behaviors and just follow the pattern.
exactly.
Ride the
Yeah.
coattails, I often say,
Yep.
right? If you
Yep.
can't
No,
beat them, join them.
100%.
And it's quite liberating when you actually decide to join them because, like I said earlier, I don't care. I ain't trying to be right. I'm just trying to make money. So
Yeah.
learn what
Yeah.
they do, follow the fundamental data, the sentiment data, and
Yeah. Yeah.
jump on when they start
Exactly.
moving the
And
market.
yeah. I think it's exactly what you're talking about is the sentiment, right? And following the money and, how big
Hmm.
these institutions are and how much money it takes to like move the market. And also just trying to figure out what they're doing. So I think it's a pretty good segue into something that our friends on the back end were talking about is Oracle. Obviously, yesterday evening,
Hmm.
Oracle they posted. Actually, they didn't post like record earnings. Like the earnings were like up to flat in line with the guidance. But obviously, the big number that everyone was looking at was the data center backlog and the build out of the data centers that they're helping build. Essentially, do you follow the equities, Tiger?
Not to that extent. I mean,
Yeah.
I did
Did you
for
hear
a
about
while when I was
Oracle?
trading penny
Yeah.
stocks, but no, I
Yeah.
didn't. I
Yeah.
just saw the same thing that you did.
Hmm.
Yeah, I saw it jump. I
So
was looking
really,
while you were chatting at the
yeah,
price
yeah,
of it, and I
yeah. I
saw it
mean,
had that big
it's
increase.
pretty crazy. I mean, I think they added what like 200 billion in market cap or something. Like
Wow.
it's
Yeah.
totally unbelievable how money just sloshes around in the market. So
Yeah. That's
yeah,
quite the spike.
yeah. Again, and one of the things that our friends for everyone watching, we have a team
Golly.
here at Hola Prime that helps us put this live stream together. So shout out to everybody on the back end. Thanks for all the help
Absolutely.
and
Back in,
obviously all the
making
stuff
us
that you
look good
guys
over
do.
here.
Yeah, they are. They're making us look good in the light and on the audio video. So for sure, thank you.
Yep.
So yeah, one of the things that for everyone watching, our backend was talking about is Oracle historic 36% gain overnight or at least in a single day. I mean, I think there was high as like 40% um, up overnight. And how does that translate like into the market? So for any of you watching, for any of you that watch me, I usually trade NASDAQ. It's one of the main markets that I go through. And obviously it's tech heavy. So like NASDAQ, it's the US tech names, obviously the biggest ones that everyone likes to talk about between the NASDAQ and the S&P 500 is the Mag 7, right? The Apples, Amazon, Teslas of the world, NVIDIA, obviously. So why is it that
For,
Oracle,
for the thing.
definitely a big company in the United States, or at least globally for sure. Um, Oracle's up 40%. Why is the market just not screaming higher? And one of the reasons why is really because of like sector weighting, and this is a really good transition into kind of what was happening and how I was getting chopped up in the Nasdaq earlier on today. I mean, I don't like to admit it, but yeah, full transparency at Hola Prime, I was down like $1,800, and I think that was the biggest intraday loss that I've ever been down. So I was down 1,800
Mhm.
bucks, and I was just getting chopped up in this. And I actually put it out. I put it out there on the Discord. I was saying, anyone else having a really tough day out here in the NASDAQ futures, and I ended up getting into it with a couple of
Oh yeah.
Hola Prime users. Well,
Oh, I can't wait to go watch after stream.
yeah. No, they were
Look.
like, no, we're making money here. Actually, I'll just pop it up here. Here, you guys can take a look. F11, make it full screen. Full screen. This is the Hola Prime Discord for anyone that isn't on it. Please go out and join. I mean, it's free to join. It's accessible right from multiple ways. holaprime.com. So our main website, you can literally just join it, I think, without even having a Hola Prime account. But obviously, if you have an account, you can join it. You can join it from the dashboard right when you log in. There's a couple of different things that you guys as a user won't be able to see, but because I'm a trading coach, I get some of the additional perks or permissions for sure. So this is what I was saying. Where was it here? Where did I start? Let's see. I'm not going to go through the whole thing. I'll be very quick with this. No, it was later on in the day because it was like around 11 o'clock. Anyone else having a rough trading day, trading NQ? Question mark. A couple of people, no, we're all making money. How's it coming? Losing it all. And then I said, I never lose. Check the stats. And then I actually put in a link here. This is a link to one of my accounts. Like I said, Hola Prime, most transparent prop firm out here, right? So we gotta be showing our trading statistics. I'm a coach, so I'm definitely. This is a direct account actually. So I've taken a couple of payouts. This is the equity curve and or the net cumulative P&L. Haven't had a red day. You look at the actual stats. I mean, it's like $1,200 to $1,500 a day. I've only had the account for a couple of weeks. So someone tried to say, hey, look at this chart. I see that your account balance went down. And I proceed to tell him, hey, yeah, dude, it did go down because I took 2 payouts so far on this account. Like, you're looking at the wrong thing, you knucklehead. So, yeah, whatever. I'm not trying to do that. I'm not trying to cause a stir, but it is what it is. Sometimes you got to put people in their place.
Yeah, very nice.
So yeah, and then of course, again, throwing shade at other coaches, right? The only person that I know who can profitably trade this is Coach Sam. He's a scalper, right? And this was the crap that I was looking at. Okay, you guys can read the rest on your own time. That's in the Discord. Please get out there and join. So this is that diddling in the middle that Coach Tiger loves to talk about, right? And it can just chop you up. And I'm going to save everyone. And I'm also going to save myself from the embarrassment, the public embarrassment of actually painting and showing you guys the executions. Because I don't even think you can see it. I don't even think you can see the executions that happened in this area because it's so jumbled. It's honestly like really disgusting. And like I said, over trading, it's been one of the things that I've grappled with, but it was tough. It was tough. I thought that we were going to go higher. I really did. We hit a ceiling, and then like we just started to get this wedge pattern forming. And that was when I actually hit reverse position, like almost like this is a 2-minute chart. So like a couple minutes before the sell-off. And this is where I made all my money back. Ended up being
there you go.
Up $1,600. I think this is like 2-3 contracts, and just like kind of wrote it down. Don't want to make too much in these direct accounts because we have that consistency that we have to keep up with if you want to get a payout. I mean, that is the goal here, right? We want to get payouts. So, $1,500-$1,600 a day keeps the doctor away, right? It's a pretty good rule of thumb. Why not?
Yep.
So that's what we're kind of going for. So back to Oracle and kind of why did the market not just like scream higher overnight? This was that 830 PPI data. So, I mean, that's kind of arbitrary to look at. But I mean, post yesterday's close, this is 6 p.m. yesterday. And for anyone watching, it's still nighttime on the 10th right now here in the United States. So this was overnight. I mean, we were up and to the right? Gave back a little for some reason. I don't know. Hong Kong. No, it's probably London. London started to push us down. And we had that 830 data. So like I said, arbitrary. So what I was looking at was again, this plays into my long thesis as I was looking to be long the NASDAQ for a breakout above that 15-minute opening range, or at least getting somewhere close to it. This is that top white line. S&P, which this is an S&P overlay, so I'm just comparing two symbols here for everyone watching. So ES futures, right? So S&P 500, it was breaking out, and it actually broke out. It broke out of its 15-minute opening range, just like right here. So I was like, hey, S&P's lifting, it's breaking out, it's above its 15-minute opening range. We're nowhere near it. Maybe we will start to get to that 15-minute opening range high in the NASDAQ. And then the S&P started to pull back, and then we just got chopped up, just going nowhere in the NASDAQ. So why did that happen? Why? Well, bring out the handy dandy calculator. Oh, what is the market cap of Oracle now? Oracle stock. Let's see. $922 billion. Unbelievable.
Woo.
Now, what is the market cap of the S&P 500? I think it's $55 trillion or something.
Jeez.
So, okay.
Yeah.
So simple.
That sounds about
simple. Yeah, simple math. I mean, 920 billion. Okay, divided by, I don't know, $55.4 trillion. Times that by 100. So Oracle only accounts for 1.6% of the S&P 500. So a 30 to 40% increase on, 1.5% of the overall weighting of the S&P is only going to drag it's not going to drag the entire index higher. Okay. Because it's such a smaller weighting. Again, we can do simple math. Like I said, again, NVIDIA. I think NVIDIA is the most valuable company in the United States, in the world. I'm not even sure. So 4.3 trillion. So 4.3 trillion divided by, what do we say? $55 trillion in the S&P 500 in terms of market cap. Wow, there was a 7 there. Whoops. 4.3 trillion over 55, we'll say 400 billion. Give it a couple hundred billion, times it by 100, get a percent. 7.7% market cap weighting, okay, is in NVIDIA. So whatever NVIDIA does drags the market. That's why it's so important. And NVIDIA is one of the things that I look at when I'm trading NASDAQ. Because again, if NVIDIA is outperforming, say it's screaming higher and NASDAQ's lagging behind, well, it might just indicate that the NASDAQ might start to get dragged up as long as NVIDIA can continue to outperform. So again, there's these leading and lagging indicators. For anyone that's curious about it, go look it up. Leading indicator versus lagging indicator. They have it in economics, they have it in business, they have it in finance. It's also in trading. So it's one of those things that you can look at as a tertiary guide, right? You don't want to just be blindly following it for sure.
Right.
Like I said, I'm gonna do what Coach Tony said. NVIDIA is going higher and the NASDAQ's not doing anything. I'll freaking buy the NASDAQ, get long. And it's okay, well, you gotta know what the levels are first. I was just looking at that because again, when we look at the chart, there was so much chop and just no clear direction. I mean, again, these bars right here were the most disgusting. Straight down, straight back up, straight down, straight back. Almost like a game. Almost like a game. Terrible. Terrible.
Yeah, no, I avoid this. I avoid the same thing. I mean, even if it's not in the middle, even if it's not diddling in the middle, if it does at the bottom end or the top end, you start getting. And if I'm ever in question about that, well, thankfully I can kind of visualize it now, but there's actually a cool master pattern indicator that you guys could put on your trading view if you ever need it. You just simply go into your indicators, type in the master pattern indicator, and when you put it on, it'll kind of color up boxes on your screen, and that is basically the contraction points or the contraction boxes. So you just basically wait for the expansion legs to come and then find the trend. But Yeah,
Nice.
that's what I like to do. I mean, I don't do as much now just because I visualize it, just because I've done it for so long. But every now and then, if I'm ever in question, hey, are we basing? Are we just going sideways on a higher time zone? Then I'll just flip it up and turn that on. But
Yeah.
it's
Yeah.
it's
100%. I
good
mean,
idea to
that would
avoid
have been
those.
extremely helpful today. I mean, but even so, like I probably
Oh
should have
yeah,
known. Like we were experiencing the same thing. Like in the first 30 minutes, like it was just so tough. Um, sorry, just looking back at the chat. Dito Wasa, new here, watching live from Nigeria. What's up? Thanks for joining us
well,
tonight,
hello.
Dita. Any questions? Any questions? Feel free to throw them into the chat. We actually only have 10 minutes left in this segment. So, we will
Mm-hmm.
use it wisely. We could talk about whatever you guys want. But again, what I was talking about before, I was referencing the Discord group chat, or really the Discord group. It's for Hola Prime, and it's got everything. It's like literally the one-stop shop for everything Hola Prime related, whether it's Hola Prime TV, whether it's contacting coaches, whether it's seeing some chart setups, payouts. I'm constantly posting the payouts. Like I love to see it. I hate to see it that some people still, are kind of denying Hola Prime. They're like, yeah, do they even really pay out? Like, oh, my account got banned. My account got blown up. Like, yeah, I traded when I shouldn't have traded. I held a position during news, tried to hold a position overnight. My account got blown. And it's like, yeah, dude, there's rules. There's rules that come with these accounts. You got to read
Yeah.
them. So you got to fully understand what you're getting into, before you just go
Yeah, and
arbitrarily
they're not
trading.
anything unreasonable. I mean, I've looked at a
No.
lot of the rules on a lot of different prop firms before All Out Prime.
Yeah.
I found
Yeah.
one that I thought was pretty good, but ultimately, whenever I started with All Out Prime, it's a lot of the same ones, but there's some that are a little
Yeah.
more relaxed. But the best part
Yeah.
is, they send you the emails whenever if they suspect something that might find you blowing your own account at some point. It's not because they want to pick on you. It's because they don't want you here for 1 week or 1 month. We
For
want you
sure.
here for next year, 5 years, 10 years from now. So at the end of the day,
Absolutely.
it's just a warning, right? Get
Yep.
the little
Yep.
email and
Yep.
just
Have you ever traded with
just to help.
Apex?
No, I haven't.
No. Okay. Yeah. I mean, they're
No.
one of the bigger dogs on the block. They're definitely. I mean, they're a chop shop. Like they're literally. I mean,
Wow.
I've been doing this for a long time. I've been really
Mhm.
disciplined in my trading and stuff like that, and it's very hard to get a payout with that firm. I won't say their name again, but nonetheless, it's very hard to
Yeah.
get a payout with them. And it's designed that way. It really is designed that way. A lot of people
Yeah.
really don't like the consistency rule. But I think it's one of the best rules out there, only because, first of all, on these direct accounts, at least for the futures side, for everyone watching,
Mhm.
Coach Tiger, he mainly trades a Forex. I'm Coach Tony. I trade the futures. So for futures direct accounts, there's no challenge, and there's also no profit target. Okay, so like because there is no challenge, you don't have to make $5,000 or
Mhm.
$2,500 or $9,000, depending on the account size. Um, there is something called a consistency rule, right? So you need to have like 20% consistency, 25% consistent. I think it's 20% consistency. And essentially you set what your profit target is, right? So 20% consistency, say you make $1,000 on the first day. Well, at a 20% consistency, you have to go 5 days in between payouts. 20%, that's $1,000 a day. You get up to $5,000 in profit, and then you can request a payout, right? So again, these are just the things that you got to look at in order to get a payout. And like every firm is different. And I think that the ones that don't have consistency, like I said, they're designed to make you fail because you go on full tilt. Like you're like, hey, first trade, middle of the market day, I'm going to do maybe half of the maximum amount of contracts that I'm allowed to trade. And that's exactly what they want you to do because you're going to blow up your account.
Yep.
So again, like I think the consistency thing, it's not brakes on your account, using the car analogy. It's more like guardrails. Okay. And when
Mhm.
you're driving down the highway, at least here in America, there's guardrails. So it's the same
Yeah.
thing here, right? It's to make sure that you don't go where you're not supposed to. So yeah, thanks for joining in. And like I said, guys, yeah, go out there and join the Discord because we're having conversations every single day. All the coaches are in there. And again, like I was saying before, like anytime you get a payout, you get a little payout certificate. So you guys can see, like I get payouts, other people get payouts. Like Hola Prime's paying out. Like it's no BS. Most transparent prop firm, guys. And again, 1 hour payouts. Like it's actually pretty funny. I was talking to one of my buddies who I got involved with. I got him involved with Hola Prime. He's like, "Is it really 1 hour payout?" And like I did a little screen share. This is one of the days I wasn't doing the stream. I was like, I'm gonna do a payout right now. Just 30 minutes later. 30 minutes later is approved. And it takes like an hour or 2 hours depending on how you take it. Like I took wire transfer, so it's quicker. And like 2 hours from then I had my payout like in my account.
Yeah,
Awesome.
I'm ready.
Sweet.
I'm set to get one of the direct accounts myself.
Yeah, absolutely.
I'm ready to jump onto one of those. Yeah, I still have another account from, like I said before, I started with Hola Prime, and it's working well. But yeah, I'm just ready to get to the direct funded.
Yeah, I know. When they gave us all those codes, I have one step challenge. I've never done a challenge. Like I said, I'm a trading coach. We've been doing this for a bit, so like I just went to the direct, and yeah, it's been great. It's been awesome. Really, no problems. Like I said.
Are those really codes are just for demo purposes though? Isn't that right?
I actually heard that they can be, if you pass. I heard this. I didn't get told this from anyone in a position of power. But if you pass, it'll turn into a direct account, and then you can actually get paid on it. But I'm skeptical because, to get paid, like you got to sign the agreement, and it's,
Oh, true. Yeah.
So don't forget, people. Like after you get out there, you get a direct account. Don't forget, like you have to go into your agreements tab, which is on the main page for Hola Prime. Right when you log in, go to the agreements tab, sign your contract. Okay, do the KYC. Get everything done. Pay for your challenge. Pay for your account, direct account, hopefully, and sign your agreement because you can't get a payout without signing it first. Okay, but you can trade on the account. I believe, without signing it. So don't forget. Okay.
The good stuff. No, I'm ready. I'm ready for it. I can't wait. Can't wait.
100%.
Can't wait. Now it starts at the 100K on Forex. I don't know if it goes any higher or not.
Yeah, I think it goes up to like 300 or 400.
Oh, okay. You have to scale up. So I imagine, because when I was looking, it was just the 100K was the highest. I think maybe I have to look again, but scale up.
So for direct on the futures, it's 150K for direct on the futures.
Oh, okay. I gotcha. No, good stuff.
Guys, don't forget, like there's a link here. Our back end again coming in hot. There's a link in here for the Discord invite. Literally just click the link. It's in the YouTube chat. So for anyone watching on different platforms, just go to the YouTube chat. That's where the chat's happening. That's where we see all the comments, all the questions, all the love. And click on the Discord invite. That'll take you right to the page, and you can join for free.
Yeah, and if you're on X watching by the way, you can go to YouTube and just go to Hola Prime TV. That's literally what you type in to find the YouTube channel.
Perfect.
So I can subscribe there as well.
Shop.
One-stop shop. Good deal.
Yeah, 100%. So anything in the last couple of minutes? I think we only got 2-3 minutes.
Yeah, just as soon as my stream. I'll be back on Forex, obviously, 3 a.m. to 7:15 a.m. Central Standard Time. So when our stream ends at 7:15, that's right when the Euro financing rate statement comes out. So that'll be what I'll be jumping on first thing. But the only thing, so that'll be what I'll be playing in that last half hour or so towards the end of the stream. But yeah, that's it. That'll be that, and then we got the CPI coming up, unemployment claims. That's it. It's going to be an action-packed Thursday morning. Yeah, they have a tendency of releasing most of the U.S. news right at 8:30 Eastern Standard, the bulk of the important news. Now, obviously, there's other times for this and that, but Yeah, that
Sure.
seems to be the most popular time they release U.S. news. So it's
Yep.
always nice when they do it early and get it out of the way as opposed to kind of scattering it throughout the day. Coach Michael was really hot about that. And I agree. I got to admit, like when they release stuff later, midday or afternoon, it gets to be a
Yeah,
pain in the
I
butt.
know. Yeah, I guess it'd
It
be a
is
little
nice to
ridiculous there.
get that volatility and the thickest part of the volume out of the way that first hour or so, and catch a trend
100%.
and ride it the rest of the intraday. So I can't really think of anything else at the moment. What about yourself?
No. Other than that, I mean, looking forward to it. I mean, tomorrow's 9/11. Obviously, day of
Yeah,
remembrance for the
9/11.
United States. Yeah, crazy stuff. Hopefully nothing bad happens tomorrow.
Yeah.
It's
Be
been
careful
insane.
tomorrow.
Yep.
Hug your kids, hug your spouse, right? And
Hmm.
just thank the good Lord or whoever you believe in or worship, right? Or don't. SpongeBob, doesn't matter, right? Just
Yep.
make it a good day. Give
Hide
your
your
loved ones some
kids,
hugs
hide
and
your
kisses. That's all
wives.
I can say. Yeah, yeah, there you go. Oh gosh, that brings
Honestly,
back memories.
they're
I'll just leave
killing
that at
everybody
that.
out here.
But yeah,
Yeah.
Lincoln Park.
I'm gonna go watch that right
Coach,
now, actually.
me
I need
too.
a laugh,
All right,
especially
Tony.
after today. All right, dude. I'll
Yeah,
catch you
we'll see you
later.
guys at Forex Fire in the morning, 3 a.m. Eastern Central.
See ya.
Adios.
Yeah, sleep well, dude.
All right.
Hola Prime, trade with transparency.